As a mortgage originator, it is 100% possible to increase your income threefold. And if you truly want to 10x your income, you can. But you first have to know how. And by how, it's a what to do. In today's episode, we're going to do a deep dive into the 9 things you must do in order to scale your business. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Dio, what's poppin'?
What's poppin', John? How about this? You know how we always talk about, like,
You always talk about?
in order to be a badass mortgage professional, you have to dominate 4th grade math?
Yeah.
Yeah, well, you and I did an episode a couple episodes back, and I flubbed some math.
Some math up.
Yes, we were dividing a fraction into a fraction.
That's hard math.
Yes, and the answer was 2, and I think the answer I gave was an 1/8, so I was way off. But you know what? I did a quick Google search. Do you know what grade you learn how to divide a fraction by a fraction?
4th.
5th grade. Therefore, I'm totally in the clear.
Oh, because it's 4th grade.
I admitted to my mistake.
Yeah.
I owned it. I had to go back and re-educate myself. But yes, that's 5th grade math. And I say we only have to dominate 4th grade math in the mortgage industry.
Shout out to the person who commented on that. Thank you.
You know what? The person who commented wasn't even commenting on my lack of math. You know what they loved?
The drug reference?
The drug reference.
Yes. Most of my fans do.
Yes. No, but I did get I got a LinkedIn message from a longtime listener.
Really?
Yeah. He's like, and then he was the one that said, "Hey, by the way, that's 5th grade math." And I was like, "Oh, I knew it." Wow. I was so worried to answer that question. Whatever.
Awesome.
Look, we all make mistakes. We all make mistakes. It's not making the mistake. It's what you do after. How'd you own it? What did you learn from it? And then how do you move on?
Blame, disassociate.
All right. Well, hey, before we get into today's episode,
Okay.
I want to give a shout out to our sponsor. The sponsor of today's show is First Home IQ. First Home IQ is an organization that I got involved with over a year ago because they are out to solve the financial illiteracy problem, or I guess you call it the financial literacy problem that we have in the United States, one person at a time. They provide phenomenal resources to mortgage and real estate professionals to be able to go into their communities and educate on the basics of personal finance. And it's a phenomenal organization for you to donate to. So go to First Home IQ in order to get all the information that you need. But shout out to Dave, shout out to Todd, shout out to Kristen, and shout out to the sponsor of today's show, First Home IQ.
Well said.
All right, so let's jump into it. You ready to do this?
I guess so.
All right, so today's episode is also inspired by my friend Steve Richmond.
Okay.
So shout out to Steve Richmond. Steve and I were on a phone call the other day, and he was like, "Hey, Dio, will you do a webinar for me?" I'm like, "Of course I'll do a webinar for you." And he's like, I go, "What do you want to talk about?" He goes, "Well, I'm doing this whole series called the 9 best X, Y, or Z."
Okay.
He's like, "Can you give me your 9 best ideas for a loan originator or a mortgage broker in order to scale their business?" So Steve and I are going to do this as a live webinar. And why I love live webinars is, well, it's because it's interactive. You get a chance to raise your hand and ask a question. When you listen to a podcast episode or you watch us on YouTube, the only way you can ask a question is to like reach out via LinkedIn or follow us on Instagram. And yeah, we make ourselves readily available to you, but it's not the same as getting your question answered in person. So I'm going to do this with Steve, and we're going to do it in 15 minutes or less. And we're going to do it 3rd week in January. Like, stay tuned. I'm sure we'll post about it on Instagram, or maybe we'll put it in the TLOP newsletter. But it actually was the inspiration for today's episode.
Okay.
Because Steve and I are going to do this in 15 minutes, but you and I can do a deep dive in 25. So in no particular order, what I do want to cover are what are the 9 best tactics, strategies, disciplines. What's the 9 best advice I would give to a mortgage broker, producing manager, etc., who truly wants to 5x their business, 10x their business, level up, break through a barrier, right? All the things that we teach in our coaching program, maybe I can tease them with some of this on today's episode and at least give something out for free to get people pointed in the right direction.
Sounds great, Dustin.
Yep. So that is what we are going to do.
Okay.
So in no particular order, I need to pull up my phone. And by the way, it like times out every 3 minutes. So you're going to watch me all episode.
It's cool, man. In 2025, man, I got all kind of new shit coming for you.
Do you?
Yeah.
Well, in order for me to have my work email on my personal phone, I have to have that
man,
code.
I'm going to have you out here like ESPN with one of them little tablets in your hand. I'm going to get a little tablet branded so you have it up here because that's when you really know you made it, Dustin. You have all your little notes here.
Look at that.
Merry Christmas, man. That's your gift.
Hey, Happy New Year.
Thank you.
Happy birthday to you a little bit early.
Yeah, thanks. That's your gift to you, man. So when you all those wishes and dreams you wanted like little Timmy under the Christmas tree, instead of get a lump of coal or a ball of shit thrown in your face, I'm going to give you this beautiful iPad.
Look at me go. All right, I love hearing that. So the number one thing I think any originator can do, okay, is dominate your lead follow-up. Like, think about this. We work so hard to generate leads. Why do we not work twice as hard to convert them?
Because they're scared. They don't want to like scare off the lead. Like, you know, when you go fishing, you don't want to make too much noise. You want them to bite, but you don't want to lose them off the hook. So therefore, it's a delicate balance, Dustin.
Well, I'm going to tell you, John, when I study mega producers, those mega producers dominate their lead follow-up, right? They don't worry about the what if scenarios and the if this, then that. No, they have a job to do, convert the lead. And if they lose one because they were the annoying salesperson who kept following up, they're fine with that because the numbers tell them that they converted 5 others that they otherwise wouldn't have converted. And then a great originator can sell that to the real estate community that they serve. It's like, look, refer me your buyers because I'm going to work that lead till they buy, die, or get a restraining order. Right. I mean, like, and those that do it, they crush it. Plus, if I'm following up with a lead relentlessly, every time that I make contact, I should pick up the phone, call the referral source, and give them an update. Now, do I really want to give them an update? No. I want to have a conversation with them. I want to check in, see how things are going, and more importantly, see if they have someone else to refer me. So it takes no money to do this. It doesn't take a massive, crazy skill set to call someone and check in, nor does it take a massive, crazy skill set to call the referral partner and give them an update and then ask them, hey, who's next? So I put it at number 1 because it's the most basic. It's the easiest one to pull off. And I think most originators, by the way, including this guy, if I ever got too busy, the first thing that slowed up was me dominating my lead follow-up. So when I started building a team, guess what the first thing is that I delegated to somebody else?
Lead follow-up.
Dominating lead follow-up. Yep, I needed them not to know mortgage, not to know that there's a T in mortgage or how to calculate DTI or read a credit report. I needed them to give great phone, pick up the phone every time that it rang, be super nice. And then one of the other things I needed them to do up front was I needed them to dominate my lead follow-up. And then if someone had a question, get them on my schedule. I didn't even need them to answer the question, just get them on my schedule. So that's number 1.
Okay.
All right. Number 2, I'm going to tell you is follow the blueprint. Now, not everyone knows what the blueprint is. In order to know what the blueprint is, you have to be a part of the TLOP coaching community. Okay, but the blueprint is our daily, weekly, monthly success plan. All it means is follow a routine. Okay, whether it's theme days, whether it's certain sales cadences that you're following, certain check boxes that you're trying to check. Right? The core has the greatness tracker, but we have the blueprint. To me, the blueprint's for the modern mortgage loan originator, but it is a 1-page simple document that you can print every single Monday. It sits on your desk and it stares at you and you stare back. And if you can just follow that set routine, if you can be organized in terms of your sales activity, if you can prioritize the things that are most important, then you are guaranteed success. Literally guaranteed success. I'll give you an example. One of the things says have 10 meaningful conversations a day. Okay, that's it. Can you count to 10? And can you make it a point to make sure you have a meaningful conversation? So one of the first questions I get is,
what is a meaningful conversation, Dustin?
What is a meaningful conversation? Here's what a meaningful conversation is to me. If you talk to somebody who wants a home loan, meaningful conversation. If you schedule an appointment with somebody who can refer you, those that need home loans, meaningful conversation.
Okay.
If you talk to a referral source, that's a meaningful conversation. So anytime you're talking to someone who can or is currently doing business with you, and anytime that you're talking to someone who can or currently refers you business, that is a meaningful conversation. If I had a conversation with my title rep who was going to introduce me to a local home builder, I would count that as a meaningful conversation because the conversation was about how I can get connected to somebody who can refer me.
I talked to my processor 15 times today, Dustin, about the same loan file because I submitted it incorrectly. 15 meaningful conversations.
Negative, Ghostwriter. That is 0 meaningful conversations. And that, unfortunately, is the difference between being a low producer and a top producer. All right. Now, if I'm going to have those meaningful conversations, then my third best practice, shout out to Steve Richmond. By the way, if you're ever looking for a phenomenal speaker or a host of a webinar series, Steve is a nationally recognized, renowned public speaker. He is high energy. He is all gas, literally no caffeine needed. The guy brings the energy and he's really good at what he does. Check him out. It's Steve at steverichmond.com. He's a friend of the show. He's a friend of John and I's, and he's great at what he does. So the third, and I'm kind of playing into, first you need to have a process. You need to have a routine. It needs to be set. And for us, we call it the blueprint. And if you come coach with us, we'll teach you the blueprint. It's how we keep our coaching clients accountable. If you want to sign up for accountability with us, I'm going to make sure you're on the blueprint. Okay. So, and I talked about 10 meaningful conversations. Well, you have to be able to figure out how to ask, who do you know? So that's the third tip. These 4 words, who do you know, needs to be almost something that you say subconsciously because it's so habitual. Like, think about all the things that you have said throughout your entire life that you didn't even know you were saying it. For some people, it's you know. For some people, it may be, what was I going to say? Like, how many people have you ever met that before they say something, they out loud say, what was I going to say? Like, they don't know they're doing that. It's subconscious. Okay. We as mortgage and sales professionals need to be able to habitually, almost subconsciously say, who do you know? So when you're having one of those meaningful conversations, what makes it meaningful? Because you hit that person with, who do you know? It's how to turn one conversation into 2 more, how to turn one transaction into 3 more, how to turn one lead into 2 leads. So that would be the third tip. Who do you know? Number 4, I'll just jump right into this. Hire a coach, hire a consultant, sign up for sales training. Throughout my career, whether it was attending conferences, whether it was actually hiring a coach, or even like right now at T-Law, we have a consultant that we are paying $2,800 a month to in order to shorten our learning curve, keep us pointed in the right direction, and make sure we're doing everything per best practice. Okay. You're an originator. You work for U, LLC. You are the business. What are you doing to invest in your business? Okay. You could spend $3,000 on leads a month, or you could spend $3,000 for the entire year of coaching and have people teach you how to generate your own leads. One of those, the $3,000 a month to buy leads, that works for that month. And by the way, that's not even the beginning. Like, just because you're buying leads, you now have to learn how to convert the leads. You now have to go buy the technology that helps you manage, maintain, incubate, and convert the leads.
How many times do you think people have foregone coaching only in the back end to like turn around and see like, damn, I spent like $15,000 on my CRM and all this other stuff? Like, you know what I mean? Instead of like,
you know what? Honestly, John, I think although that happens, like I can look at the trajectory that we went through in T-Lop, and in hindsight, which this is called Monday morning quarterbacking. In hindsight, if I look at the $250,000 that we have invested into this company, some of it actually cold hard cash, some of it sweat equity. Like a lot of it was sweat equity from you and I, but there has been some cold hard cash. In hindsight, we probably could have gotten to where we are today quicker had we just dropped all of that money up front, hired a consultant, hired a coach who could have shortened our learning curve. Now, that wasn't our trajectory. That wasn't in the cards for us. That's not what the universe gave us. But in hindsight, if I had to do it all over again, I wouldn't choose our path. Our path worked for us, and I'm grateful for it. So I don't think there's that many people who even spent $15,000. I think for the bulk of the mortgage and real estate professionals out there, they do nothing. They don't spend any money. They treat it like it's a job. And we all know this is not a job. This is your career. I mean, I can't have a dental practice or a law firm without having an advertising budget. And my dentist, guess what he has? A business coach. And attorneys, guess what they have? Mentors and more than likely business coaches. So I'm saying the next top things, best of best, yes, sign up for and pay, but more importantly, indulge and be a part of some kind of a coaching culture, coaching system. You can hire a private coach. You can join the TLOP MLO coaching community. You can go to a conference. Like how you do it is up to you, right? We offer coaching and we're damn good at it, right? We phenomenal value. I would argue the best value in the market. What we give for $3,000 a year, others are charging $18,000 a year, right? We are a top notch in terms of our content, in terms of our coaches, in terms of access, organization. We just don't charge an arm and a leg. It's a membership. Think like being a part of a gym. So hire a coach. Now, if it's not us and it's one of the other really good companies out there, you know them, some of them have been on the show, by all means, like fly your freak flag and you do you, homie. But those that are really good are coached, they hire consultants, they attend conferences, right? If you want information on coaching, tloponline.com is where you'd go to become a member of our coaching community. Now, we do have twice a year, and it's only twice a year, a special course. It's a 16-week course that I personally teach that it's called Originator Launch, or some people call it LO Launch, and it is guaranteed to change your career. Okay, those that have gone through it, because we do it twice a year, so we only have 20 spots open. So we're recording this in December, and we already have probably 8 reservations. The class doesn't start till February, so this will fill up, this will sell out, and then we won't do it again until September. But like the men and women who've come through are now getting opportunities to be a branch manager. They are earning twice the income that they've ever earned. They're having record months. I'm talking about like $3.7 million a month in volume. They're winning Rookie of the Year. Like, this is no joke, legit. I am going to teach you everything you need to know to launch your career. So if you're not already funding 4 to 5 loans a month, you probably need LO Launch, and the value is just, it's unexplainable. So anyhow, so that would have been, I think that was the 4th that I gave, right? All right. So let's do this. We said dominate your lead follow-up. We said hire a coach. We said follow a routine. Mm-hmm. We coach and teach the blueprint. That's our copyrighted, trademarked, work of art. I talked about who do you know needs to become a subconscious habit. So next on the list, uncrack the code for proper social selling. And again, if you coach with us and teaser, I'm probably going to do some of this in 2025 for free. I'm going to teach the class, Uncrack the Codes of Social Selling or Online Networking. Many of you have heard me say this, but for others, this is going to be brand new. Write this down, 30-10-5-5-3-1. That's the code. You must spend 30 minutes online per day intentionally networking. Intentionally. So of those 30 minutes, you're gonna find the people who mean the most to you, those that can refer you business, AKA, by the way, like i.e., those that can refer you business, or those that can be clients, are those that are most important to you for this exercise. And you are going to like, heart, or emoji 10 of their comments. You're then going to send out 5 connection requests, whether that's a follow on Instagram, a friend request on Facebook, or a connection on LinkedIn, because you have to grow your network. You're then going to comment on 5 people's posts. There's a difference between doing a like and a comment. A like is me making eye contact and smiling. A comment is me engaging in small talk. 3 times per day, you're going to slide into somebody's DMs. You're going to send them a message on LinkedIn, or you're going to hit them up in Facebook Messenger. Why? Because I want to have some kind of a one-on-one conversation. Now, I'm not going to hit you with some kind of like pitch to meet or pitch to do business together. No, I'm probably going to comment on your profile. I'm going to comment on the things that you've been posting, and it's probably going to be something that's gratitude filled or complimentary. Okay. But I need to do that 3 times. Now, obviously, when I'm doing that, I hope the conversation leads to, hey, we should meet in person. Like no different than if I was at a traditional networking event. I'm going to engage in small talk with you, John, but my goal is that we can get one-on-one for lunch next week. And then I need to post daily. Because if I'm not posting, no one's going to get to know me. If they don't get to know me, they'll never like me. If they don't like me, they won't trust me. So I have to post today. I have to post once a day. And when I post, it's 3 times personal, 1 time business. So that's something that if you could turn that into habit, you would see your leads and your referral sources all exponentially grow. All right. That would have been number 5. Number 6 on this list of 9, learn how to effectively work open houses. Right? That's a big thing for me. We've had Ian McDonald on this show. We've had Andrew Wagner on this show. Both those gentlemen, as well as myself, have launched our careers by working open houses. We had this guy on the show back in the day named Barry Botwin. Barry didn't launch his career doing open houses, but he doubled his leads and doubled his volume because he had a coach who had challenged him to work open houses for 6 months of a year for the sole purpose of meeting new agents and then befriending some of those agents, developing those meetings into partnerships, which generate more leads, which lead to more closings. So here's what I can tell you about open houses in general. A, you're not there to wait around for 3 hours for someone to walk in and want to do a loan with you. That's not what you're doing.
Shit.
You're not there. No. If you spend 3 hours at an open house, something went drastically wrong, or you must have been with some dog, some killer, some just mega producer, and you spent 3 hours because it was all about spending 3 quality hours with that.
I was there for the charcuterie board and unlimited wine, clearly.
I mean, hey, if that's what's going on, good for you. But again, that's not what is the most replicatable, the most scalable. Okay, we work open houses by literally saying, if I'm looking at January through June, there's 26 weeks there, and I'm willing to work 15 Saturdays, and I'm going to dedicate 3 to 4 hours times 15 Saturdays. I want to hit 3 open houses. I want to slide in. I want to like throw my hands in the air and be like, hey, don't get up, just another lender checking in on you. And then check in on them. Introduce yourself. Let them know that you're not a traditional banker, that you don't work banker's hours, that you too are available nights and weekends, and that you are on your way to an appointment, because you're always on your way to an appointment. And you want to stop in and check in. See how things were going. Let them know that, hey, I'm around. If you have any questions, give me a call. If you need me to run some numbers, give me a call. But I need to slide down the road real quick to get to my next appointment. Ultimately, what are you going to do? You're going to get in your car or truck. You're going to send them a LinkedIn request, a Facebook request. You're going to follow them on Instagram. You are going to follow up with them on the following Monday, ask them how the open house went, and say something along the lines of, I wish I could have stayed longer because I want to get to know you and find out how a lender like myself could add value to you in 2025, help you close more transactions and make more money. Would you like to meet for coffee or for drinks after work? Do you like Tuesdays or Thursdays, right? Like I'm going to hit them with my ask. That's how I turn my open house strategy into results. Is I hit 3 on one Saturday. Every single time I'm popping in for 30 to 45 minutes max. I always have somewhere else to be. I'm connecting with them in my car before I leave the driveway. And then on Monday, I'm reaching out to schedule a one-on-one. If you did that, what I say for 15 out of the first 26 weeks of 2025, you are really any year, right? Just pick any random 26 weeks and say you're going to do this 50. You would have met roughly 45 realtors. Of those 45 realtors, you would have convinced 25 to meet with you. Of the 25 that met with you, let's just say 15 of them aren't worth your time, or they didn't like you, or you didn't like them. That still left you with 10. Of those 10 realtors, you will on average close 1.5 transactions per year per agent. That's 15 transactions. If your average loan size was $300,000, that's $4.5 million in volume. If your average commission was 100 basis points, that's $45,000 in income. For doing what? Being willing to work 3 or 4 hours, 15 Saturdays out of 26? And what I love about this industry is that 45 grand is 60 grand next year. It's 90 grand the next year after, because you're going to build and grow with these agents. You're going to meet listing agents who will then refer you. And all of those buyers or those borrowers end up referring you their friends, family, and coworkers, as long as you're willing to learn how to subconsciously ask, who do you know? There we go.
Good job.
You are glossing over, John. I love this. Next on my list, and for time's sake, I'm just going to jam it right through.
Okay.
For time's sake, you gotta understand one-to-many strategies. There's a book. The TLOP crew is going to read it in the first quarter, because something we're doing part of business planning at TLOP is we're going to have one book per month that the group reads together, so we can discuss it and so that we can all learn and grow together. I would tell you to go buy the book One to Many. One to Many, I believe, I haven't read it yet, but I believe it's more about leveraging webinars to explosively grow your business. But One to Many is also lunch and learns that you do in person. So embracing the one to many strategies, embracing lunch and learns and webinars where you're given educational value for free in order to attract an audience that you can then end up meeting or end up soliciting for a referral relationship. That is a top 9 best practice. And then lastly, as you build and as you grow, there's only one of you.
Clearly.
Okay, you can't do it all. You shouldn't try to do it all. You need to find a who and not a how. So working twice as hard can get you far in life, but it can't get you to your end goal or your end destination. Eventually, you're going to have to learn how to team build, how to delegate, how to properly onboard, and then inspect what you expect, so you can offload the $25 an hour task, and you can focus on the $250 or the $500 an hour task. So understanding how to find a who versus a how is a top 9 best practices. So in the order I wrote them down, did we talk about dominating lead follow-up, John?
Yeah.
We did.
Okay,
We did.
yeah.
Okay. Did I talk about 30, 10, 5, 5, 3, 1?
That's the combination for
Yep.
something.
Did I talk about coaching?
Everybody needs it, just not me.
Yep, and probably too much. Right, I talked about it too much. Like, I talked about coaching too much. All right, I talked about the blueprint. I talked about, I did not talk about the 12-week challenge. See?
That's
See?
Right, yeah.
Yep, so we're not at 9 yet. But we did talk about effectively working open houses. We talked about the one-to-many strategy. We talked about who do you know. We talked about find a who and not a how. So the ninth of this list of top 9, we'll call it. I don't even know how Steve came up with 9, but he came up with 9. I guess it's his lucky number.
I don't know, because people just pull out shit out of their ass. That's what it is.
Well, I like odd numbers. 3, 5, 7, 9. My favorite number is 19. I think it's odd. I like odd things. So the 12-week challenge, if you're ever in a point in your career, you could be brand new and newly licensed, or you can be 10 years in, but you are stuck in a rut, or you've plateaued, or you need to break through a barrier. I promise you the 12-week challenge works. I know it works because I've personally done it twice in my career, and I've had 40 coaching students. Those men and women who go through LO launch, the 12-week challenge is a part of that course where you're going to do it. I'm going to teach you how to do it. I'm going to hold you accountable, and we're going to talk about your results as you go week by week completing the challenge. But it's simply put this: for 12 consecutive weeks, I need you to reach out to 12 potential referral partners to introduce yourself. You can do so via email. You can do so via snail mail. You can do so via social media. I then need you calling 12 people every single day in order to schedule a one-on-one. I need you to go on one-on-one every single day. And if you do that for 12 consecutive weeks, that's 60 business days, that means you would have met face-to-face, belly-to-belly with 60 real estate agents. You can run the 12-week challenge in conjunction with the open house challenge because it's a numbers game. And just like with the open house challenge, when I broke down the numbers, the 12-week challenge works very similar. You met 60 real estate agents face-to-face, belly-to-belly, of which 30 of them weren't worth your time. What do I mean by not worth your time? They're not professional, they're not full-time, and they're not in growth mode. We should only be working with agents that are professional, full-time, and in growth mode. So 30 of them didn't fit that mold. So 30 did. Of the 30 that did, 15 of them you didn't like or they didn't like you. It was not a good fit. We do not have to be all things to all people. We have to be all things to our people. So you found 15. So you completed this challenge. It took you 12 weeks, 84 days, roughly 3 months to find 15 referral sources. That'll be your referral sources for the next 3, 5, 7 years that you're going to close 1 to 2 transactions per year with. Again, running the math, that's at least 20 transactions. That's at least $6 to $7 million in volume. That's $60,000 to $70,000 in income. All because you were willing to suck it up, buttercup, head down, blinders on, and grind it out for 12 weeks. Like, this is the shit that men and women who are making $300,000, $400,000, $600,000 a year, this is shit they did to build their business, and this is what they're doing to stay on top. These are all things that mortgage brokers and loan originators can all embrace in order to double their production, 5x their production, 10x their income. It's that simple. So the knowledge is out there. It's more importantly, what are you going to do with the knowledge? Are you surrounding yourself with the right people? Are you being held accountable? What do your actions say about you? Right? Because your words may say one thing, but your actions speak the loudest. Lastly, John, before we find a way to wrap up, if you noticed, I kicked off today's episode with today's episode is sponsored by our friends over at First Home IQ. And if you're interested in learning more about First Home IQ, go to the website, firsthomeIQ.com. Okay, if you're interested in being a show sponsor in 2025, if you're interested in advertising on this show, this is something that we've never allowed previously that we will be rolling out in 2025 as we become more intentional. As you buy me that iPad and as it sits on the desk so I don't have to have my cell phone or my notepad, then that's us becoming more intentional. Going into 2025 and beyond, we should anticipate allowing one company or one organization to sponsor each episode. And we're going to allow up to 5 companies to advertise on our platform. So if you're interested in any of that, or you think or you know of someone who is interested, have them reach out to our girl, Nikki, Nikki. It's Nikki, Ray's her last name, Rhea. You can see her all over LinkedIn. Her email is nikki@tloponline.com.
There you go.
But at this point, we appreciate the hell out of all of you for tuning in, for following us on Instagram, for connecting with me on LinkedIn, for sharing our content. And if you haven't shared it yet, please, if you want to spread some holiday cheer, share this content with 3 people that you think would enjoy it and would benefit. And then lastly, if you are looking for more content, subscribe to our YouTube channel, sign up for our newsletter. It's free, tloponline.com. And if you're truly serious about your business and you want to invest in your future success, consider LO Launch. And if LO Launch is not the right fit for you at this point in your career, at a minimum, come join the TLOP MLO coaching community, where at least you'll get 84 plus live coaching calls, 5 coaches plus me every single month for the entire year. And it's so affordable that all we have to do is help you close 1 extra loan for the entire year, and it more than paid for itself in most markets. So he's John Coleman. I'm Dustin Owen. You've just tuned in to the Loan Officer Podcast. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.